Hello, I'm Robin Gibson and this is the Harvard House Money Morsel. Welcome back. Please don't forget to like and subscribe. Click the bell so you get a notification of when we release a new video. I'm sitting today with Michael Porter again. Welcome, Michael.
Morning, Robin.
So, Michael, yesterday the Monetary Policy Committee, MPC, met and we had no change on interest rates. The whole of last year we really talked about inflation and interest rates. Now, I don't know if the MPC is as detailed as the Fed and that you really investigate the minutes of what they put out. But can you give us an idea of what's happening on the inflation front and with interest rates?
Sure. Yeah, Robin, I don't think we pour over every word and the nuance of every word with the SARB as we do with the Fed. That's probably a good thing. Yeah, Robin, yesterday interest rates were unchanged, which was as expected. It would have been a shock if interest rates had gone up, certainly, and I think it would have been quite a shock if interest rates had come down. I think everybody was pretty confident that they were just going to be on hold. And so early in the week we had inflation numbers. Inflation came in at 5.1% year on year. It was slightly better than expected. And also we had PPI, which is producer inflation, that came in at 4%. So that really highlights that there's not a lot of pressure coming through the economy from a manufacturing point of view. I mean, manufacturers aren't putting up their prices or feeling significant cost pressures and things like that. So that bodes well for inflation in the next couple of months as well. So generally speaking, the inflation picture is pretty benign. As we talked about last week, the SARB always puts out its sort of projections for growth. So they're projecting 1.2, 1.3% growth this year. I think it rises to 1.6 or 1.7% next year. Now those are pretty low growth numbers, bearing in mind we haven't been above 1% for quite a few years, barring the COVID sort of distortions. So, the SARB also highlights things like our own logistics constraints as a handbrake on growth and possibly inflationary pressure coming through from that, in addition to what's obviously going on globally, which we talked about last week. So, I think the SARB's become a pretty reliable institution. What has always been, let's not say it's always been a pretty reliable institution. They don't shoot from the hip. Yeah. The other thing that was announced yesterday was that a new member to the MPC, so the MPC, the Monetary Policy Committee that actually determines interest rates, consists of 5 people. Okay. Now the one chap, Kuban Naidu, he resigned at the end of last year, and I forget where he's going, but I think there's rumours that he might be going to Nedbank, to be part of the Nedbank management team. But sorry, my memories just escaped me on that one for a moment. But yesterday they announced a new member of the MPC, and there was a bit of debate about that because, there'd been no announcements. So it's a chap called David Fawkes. I'm not quite sure how you pronounce his surname. Fawkes. He's actually been in the Reserve Bank a long time. He's part of the research team. He's got a very impressive CV. And I think that actually just adds more credibility to the SARB going forward. Yeah. That Monetary Policy Committee is a very sound committee. They apply their minds to it. They don't make spurious decisions. Yeah. They don't make populist decisions. They follow their mandate. And I think to the credit of South Africa, I think it's the Treasury and the Reserve Bank really do keep the monetary framework in check in this country.
Yeah. Michael, we actually attended a presentation by the head of that research unit, didn't we? And we were highly impressed by him.
Yeah.
So that's they're really a seriously well put together unit, aren't they?
Yeah, no, I think the SARB, they'll give their sort of guidance. Their guidance is basically indicating that the repo rate should be at sort of 7.5% by the end of this year, and it's at 8.25% now. So that kind of tells you that there are some cuts coming at some point over the course of the year.
Yeah.
But I think there's still very much debate as to when the cuts start. I mean, you could make a case for March if inflation numbers continue to be how they are. It's probably more likely to be May. Yes. Quite honestly, just given the global situation and things like that. But we should have interest rate cuts. So, if we have elections in sort of May as well, we're probably looking at a slightly tougher first half of the year from an economic point of view, and maybe a little bit of uncertainty, and then a bit more of a positive second half of the year.
And Michael, very quickly, there was some sort of a glimmer of hope on the retail side yesterday, wasn't there?
Yeah, Robin. I mean, I think Christmas trading updates are coming out. I mean, I think there's some good and some bad, but generally speaking, I think that Christmas trading has been better than expected. So, I mean, if you just remember back to November and December, November we had bad load shedding, especially around that Black Friday time, and we had, I think, even stage 6 towards the end of November, which, and that Black Friday weekend we had stage 6 load shedding or something. So that really impacted sales. And then when quite a few of the retailers sort of put out trading updates, sort of late November, early December, that sort of impacted. Now, December was much better than expected. So everybody's reporting that December was a much better number. And yeah, Robin, I mean, there's plenty of evidence of consumer stress. We all know that. I mean, people are under pressure, but we haven't had any interest rate increases now, I think, since May last year. And so at some point that does work into the base. People get, this time of the year, people maybe get salary increases or something like that. Every company's different, but that impact of high interest rates starts to dissipate a little bit. It gets into the base, and so yeah, I mean, I think Christmas trading is a little bit better than expected. I don't think it's shooting the lights out, but as we always say, the market can price things in, and then when it gets it wrong, that's when you have share prices reacting, and sometimes the market gets far too bearish on something like that.
Well, nice to see that South Africans continue to show their resilience, and it's fantastic that we've also got another world champion. If you don't know what UFC fighting is, we've won the world middleweight championship, which is another great win for us. Michael, thanks for giving us some insights. Thank you for joining us. Please don't forget to like and subscribe, and we'll catch you next time. Bye-bye.
Bye.